So today is webinar number 2, and it is on the subject of insurance. This is for all of those who have registered for DhanGyan for schools, the program that we are organizing in schools. So just for the information of everyone, this webinar is being recorded and is being streamed live on our YouTube channel. Links to the video will be shared with all of you so that you can review and look and take a look at the information once again. Now, for the benefit of those who are joining us for the first time, just to sort of give you an idea of what is DhanGyan all about. So DhanGyan is a comprehensive online financial literacy course, and it was started in 2015 by Tata Capital and the Center for Environmental Research and Education. It contains key financial concepts that improve basic understanding and the skills required to become financially literate. Now, you all know financial literacy is a skill that is required at all facets of our life. So very important that we understand the basics, and that is exactly what the portal of DhanGyan gives you. So taking DhanGyan into account, we launched a program in schools which is called DhanGyan for Schools. And what is this program? USO is collaborating with Tata Capital and IDOBRO Impact Solutions for this program, which is aimed for students between standards 8 and 12. Through this program, all the students will learn the basics of financial literacy through the online modules. They will attend expert series webinars, and today is one of those webinars. And it will be followed by an online test. And all of these shall help strengthen the core concepts of financial literacy among all of you. So just to go over the program, because there were a lot of questions that we received yesterday as well, this entire program is divided into 3 phases. And each of the phases has been designed so that the students and our teachers who are also guiding the students, they will all learn real-life applications of the knowledge that they will gain through the modules, through the webinars, etc. So in phase 1, which is what we are going through now, students are required to complete the first 5 modules of the online portal. And I will tell you a little bit about what the online modules is, because we had a lot of questions that we received via WhatsApp as well. These 5 modules cover the various topics. Today's topic, insurance, is actually module 3. Now, once the school registers with us, and sends us a list of the students, their login IDs are created and sent back to the teachers, along with a link where and how you can access the online modules. So for the students who have not yet done or completed the online modules, kindly let your teachers know so that they can send you the link again and you can register, you can sign in and access the modules. After taking or appearing using all the modules, you will attend the expert series webinars, and then there will be an online test. Now, the online test link will be sent to the teachers. The online test will be on 26th of January. For certain schools, I think because of exams, we may give them a day or 2 extra, but the link and the date and the time will be communicated to the school at a later stage. After that, we enter into phase 2 of the program. Phase 2, what it involves is top scoring student from each school will be invited to complete a special project. That student will do the project in conjunction or in collaboration with a teacher. We shall select the top 10. It'll be first a written project. Once we evaluate all the written projects, top 10 projects will be invited to share a video of the project. And from there, we will select the top 5 projects, and the student and the teacher shall be invited to USO House, New Delhi to present their project in person. So now just to tell you a little about the partners. As you know, USO is organizing this in schools, and USO is a registered society established in 1951. And what we aim to do is to help students become global citizens of tomorrow. And how do we do that? We introduce several extracurricular activities in schools, which may be socially, culturally, or morally help students improve and advance their levels. We do conduct all of these activities by means of seminars, conferences, competitions, and programs. And DhanGyan for Schools is one such program. All of our activities are national in nature. So right now, all the students who are joining us on via the YouTube live link are from all over India. Now we are partnering in this program with IDOBRO. IDOBRO is an organization that we have been working with for the past 3-4 years. They are a high impact organization that deal with several areas and not just education. They value the communities a lot and have done some great work throughout not just India, but also in other countries for the advancement of these communities. And our most important, last but not the least, we were saving saving the best for last, is Tata Capital. Now, Tata Capital is a subsidiary of Tata Sons Limited and is registered with the Reserve Bank of India. They offer directly and through their subsidiaries several financial services to their customers under the Tata Capital brand. We all associate Tata brand with trust, so Tata Capital is no different in that respect. And they are a one-stop financial service provider catering to the diverse needs of retail, corporate, and institutional customers. They have over 100 branches all over India. So for those of you who attended the webinar yesterday, I hope you got a lot of insight with respect to SMART goals and budgeting. This is our webinar 2, which is on insurance, which is a very, very important and pertinent topic. And for this webinar, which is module 3 actually in your the online module, our eminent speaker is Mr. Shantanu Ghosh. He's a senior manager for product insurance in the commercial and SME finance division. SME is small and medium sized enterprises. A little about Shantanu. He is an experienced sales professional with demonstrated history of working in financial services and in the leasing industry. He is skilled in business development, corporate sales, strategic account management, marketing management, product demonstration, and several such other areas for both insurance alliance and institutional sales. He has a postgraduate in management and is focused in sales, marketing, and growth. So with that, I'd like to welcome Shantanu to our webinar series. Shantanu?
Yeah, hi Nina. Good evening. And
Great.
good evening, everyone.
Good evening.
And it's a very wonderful feeling to be back among students and teachers after a very long time. So even
Yeah,
I'm looking forward to
indeed.
this session. So
So
shall
great.
we start?
Absolutely. So if you could kindly, I'm going to stop sharing my screen, or if you could start sharing yours, we can
Yes,
start the program.
yeah, sure. So to start with insurance, first of all, I would like to welcome everyone who have joined online. As I can also see on the YouTube, there are many people who have joined, especially the teachers and students from various schools. So to clarify first, please do put in your questions in the chat or the comment section whenever you have one. In case you want to keep it for the latter part, then please note it down on a piece of paper, because I'm sure when this picture comes up in your screen, definitely you will have a lot of queries. So to start with insurance, as the picture depicts, it's basically you see a family in this picture with a protection. Two hands have made a circle and is protecting the family. So with insurance, we can relate the word protection. So let's move on to the details of insurance. So what is insurance? So financial institutions will tell you that it's a financial product which is sold by various insurance companies to safeguard your property and asset against the risk of loss, damage, theft, burglary, or any natural calamity. How I phrase it is as insurance is a means of protection from financial loss in which, in exchange of a fee, a party agrees to compensate another party in the event of a certain loss, damage, or injury. So basically, insurance is a form of risk management which is primarily used to hedge funds against the risk of a contingent or uncertain, unforeseen calamity or risk. Here, I would like to take you through the world and the history of world insurance. So if you see the pictures, you would see that so if you see this picture, there are two ships who have went on a voyage and they are carrying certain goods. So yes, the insurance concept has started from the ancient period, and the traces of insurance can be found in all the old historical books, and it goes back to as early as 4000 to 3000 BC in Babylon. So previously there were certain bottomry contracts which were known to the merchants of Babylon. Earlier, when the people would go for voyage or merchants would sail the seas for import and export of goods, their ships would be attacked by pirates or might get stuck by a storm in the sea. To safeguard from those calamities, people would form a group. They would hedge certain funds, and then if a ship comes back without any problems, without any losses, then the funds remains with the group. If there is a ship or the owner who has come back but he has faced certain losses, then that amount or certain amount which is the loss would be given to that person in order to recover from the financial losses. If you see here, I couldn't get a very clear picture, but this is the first known insurance contract that dates back from Genoa in the year 1347. After these, so the first of the insurances like were spread across, and the maritime insurance developed widely, and premiums for those were intuitively varied depending on the risk. So the insurance goes as early as 3000 BC. Now let us come back to India and see the history of insurance in India. So if you see here, insurance as a concept or insurance company started in 1818. So I believe none of us were there in that year. So insurance was born on that year. The first insurance company in India, Oriental Life Insurance Company. This was established in Calcutta. But wait a moment. Is this the first Indian insurance company? No, this is not the first insurance company by the Indians. This company actually was established by Europeans. So coming to 1870, the year, we see Bombay Mutual Life Assurance Society. So this was the first Indian insurance company specifically dealing in life assurance or life insurance, was established in Bombay, then Bombay, now Mumbai, in the year 1870. After 36 years, the National Insurance Company was established in the year 1906. So in order to manage these companies, there were certain rules and regulations which needed to be set. So in the year 1912, Indian Insurance Companies Act was passed to regulate and have certain list of do's and don'ts for these insurance companies. Coming to 1956, this year was the birth year of LIC, the Life Insurance Corporation. 245 existing companies were merged to form Life Insurance Company, which is one of the largest insurance corporation in the Indian sector or the Indian insurance sector. Now, in 1972, there were four general insurance companies which were grouped from 107 existing insurance companies. So, in this year, 1972, there were around 107 different insurance companies who were then merged with one another, and four different insurance companies were formed. This will be a question which I'll ask at the end of the session, that if any one of you can name all the four insurance companies that were formed in 1972. Now coming to 1999. As I understand, as you all are school students, you must have ever been to a bank for any savings account or even with your parents. So all the banks and the financial institutions in India is governed by RBI, Reserve Bank of India. Similarly, all the insurance companies in India are regulated by Insurance Regulatory and Development Authority of India, IRDAI. So in the year 1999, IRDA was set up, and to regulate the insurance sector and develop it, this institution was formed, and they capped an FDI, a foreign direct investment of 26%. So any foreign company which wanted to enter into the Indian insurance segment could only have a share in the company, in the Indian company, for up to 26%. So these are very vital data and milestones in the journey of history of insurance in India. Then coming to the year 2015, as the market grew, as there were lots of development, then in 2015, the capping on FDI, foreign direct investment in the insurance sector, was raised from 26% to 49%. So this is a remarkable milestone. Many of the large foreign players like AIA, your AIG, Alliance, and others came into the Indian segment. They started investing heavily on the Indian insurance companies and took partnership for up to 49%. Now we'll go to the type of insurance. As you all know, that insurance would be important as a protection in many segments of life. So insurance here I have categorized in two different segments or two different types. First is the general insurance, which will include your health insurance, motor insurance, travel insurance, your home and property insurance, fire insurance, and others. Now, if you focus on the word others, I have kept the font a bit higher and I have highlighted it, because insurance, anything that is tangible, that has some value, most of the things can be insured. Now, in general insurance, all the insurance would be covered apart from life. So for coverage of life, we have life insurance. Life insurance has various different plans, like it can be a term life insurance wherein the amount you pay would be to cover for a certain period of time. Say you want to cover yourself for 10 years or 15 years. Then the next is the whole life insurance, wherein entire lifetime would be covered. Any calamity, in case of a death of the insured, the amount will be paid to the nominees. Endowment plan. This plan is basically used in order to fulfill your short-term or long-term goals. For example, today you are, say, 18, you start working at the age of 23, 24. You want to retire early, you want to retire at 40. And let's say you want to go visit any foreign destination or go on a world tour. You would require a lot of money to do that. In that case, at the age of 23, 24, you can take a 15-year coverage of insurance in an endowment policy plan at the end of the policy term, which can be up to your age 40. So when you attain the age of 40, you get the lump sum amount. You can definitely go abroad and travel and fulfill your dreams. Then in the life insurance segment, we also have ULIPs. These are all market linked products and have certain risk and rewards associated with them. Then child plans. As students till the age of 18, our parents can also take insurance for us. So till the age of 18, people can take. Okay, so I'll just take this question. I have a question from Mr. Manveer. Then life insurance is whole life insurance. Yes, life insurance, you can say life insurance, all these which I have highlighted are part of life insurance. It's just the different plan that we are talking about. So life insurance is, yes, a whole life insurance is also part of life insurance only. This is the type and these are the examples. So a term life is also a life insurance, but here you can decide a term up to which you want to cover yourself. Let's say I decide 20 years. So for 20 years, I am covered in this policy. Today I am 34. Till 54, I'll be covered under this policy. If anything happens to me, then my nominee will get paid this amount. A whole life policy. I can take it up to the demise. So today, let's say if I live till 99 and I pass away at 99, I'll be covered in this whole life policy. Endowment policy is kind of linked with a term policy, but here you get a lump sum payback. In case I survive, let's say I've taken a policy period of 20 years, and in case I have survived till 54, then this policy will pay me back a lump sum amount at the age of 54, and I can use that money. So it's unit linked insurance products. This is ULIPs, unit linked insurance products. These are all market linked products. I was taking the second question. Child plans I have explained. Now I'll go to pension plan. Say today I'm 34 and I want to work till 54, and after that I don't want to work and I want to get a payment in order to run my household every month. I can take a pension plan which will give me a return. Let's say at the age of 54, to run my household I need at least a lakh rupees. So in order to get this lakh rupees, because after the retirement I'll not have the job, so I can take a pension plan and I can design it in such a way and I can invest in such a way that at the end of the retirement I get this amount every month. So these are the different types of insurance: general and life insurance. So this is a question for you all. Can you tell me what is the left side picture depicting and what is the right side picture depicting? Anyone? I'll take this question answer on the YouTube chat. I'll take a minute silence and I'll see if anyone can answer this. Can anyone tell me the difference between the two pictures? Yes, Mohana Srinath. She says on the left side there is an accident. And what's on the right hand side? Yes, absolutely correct. On the left hand side, the guy is secured because his car, the person here on the right hand side stands worry free because he has taken the insurance for his car. So then, even if in case of an accident, his vehicle will get repaired because he has taken the insurance. He doesn't have to pay anything from his pocket. The entire expense of the accident would be taken care of by the insurance company. Thank you everyone for the answers. I can still see Gurban Singh, Sumitra, Arnav, Agam Modi, and others answering. Thank you everyone for participation. So see, insurance is a very vast subject. You just need to understand what is the importance of insurance. And I have specifically picked up here two subjects: life insurance policy and health plan, a health insurance policy. I'll tell you all about the reason of picking these two. As a student at your age, your parents should be taking a life insurance policy. This is in India, the developed take in of insurance is hardly anything. People, though we are around 140 crores in population, still the insurance takeaway is 0.9 to 10%, zero point 0.9 to 0.1%. First, we need to understand why insurance. Insurance has to be taken mainly for first option is security. The first advantage of insurance to secure yourself. You have insurance in case of a financial loss, insurance company would cover it, so you are secured. You don't have to worry for it. Safety. With security comes safety because money is the game changer here. In case you have an insurance, let's say you have undergone or your vehicle breaks down, it needs 1 lakh rupees to get it repaired. We might not have 1 lakh rupees readily available with us. We are all working class. But yes, had we taken insurance and paid only a very little sum. So I'll tell you, if my car value is 10 lakhs, the insurance policy would hardly be 25,000 rupees in a year. Now, if I have taken a car insurance and there is a damage of 1 lakhs, I have only paid 25,000, but insurance company would be paying me this 1 lakh rupees. So I will not have to undergo the burden of this 1 lakh rupees expenses. Insurance company is there to take care of this. So that's why I am safeguarded. This is where safety comes in. Protection. As I have shown in the previous slide, the vehicle which got damaged, the person on the right hand side was completely stress free, tension free, because he was protected against such unforeseen events. An accident cannot be predicted in advance. So, this guy who had taken the insurance is secured, is safe, and has the protection from the unforeseen event. Help. Insurance company would help you out to get your claim and to reduce the burden of the financial loss. And of course, you have confidence. Say you have an Apple phone, iPhone, and you have an insurance Apple Care for that product. You can use the phone the way you want, because in case there is an accident, the phone falls down, there is a screen break or anything, and which will cost you around 50,000 rupees. Apple Care is there for which you have paid, say, 10,000 rupees, and you are protected. Your screen would be replaced, your entire mobile will be replaced. So, this gives you confidence. In case you don't have a insurance or Apple Care plan, but you have an iPhone, it falls down and breaks down. Then again, you will have to go to your parents, ask them for some money, which is around 1.5 lakhs, and go to the shop to buy a new one. So that financial burden is reduced in case you have a insurance. Why we are focusing here on life insurance? So I'll take, there is a very important question from Om Alok Gain, who says, sir, if we will use the money that we will use in insurance in fixed deposit or we'll invest it, then also we can get back our money and with some extra amount. So, sir, why shall one take insurance? Very lovely, wonderful question. I'll explain this. Okay, so today I am in a family where I have my father, mother, and myself. I am a school student. My father works in a bank and he earns, say, around 50,000 rupees. Now, so this income which he brings in is used in running the household. Now, how much can he save from that amount? How much can he put in the fixed deposit from the 50,000 amount, or for some of you it might be 5 lakhs. So on a 5 lakh amount, even if you put 2 lakhs every month for a year, you would be saving around 25 lakhs. God forbids, in case of a calamity, when there is a threat to the life and the person, the bread earner, is no more, then this amount is not there, but still me and my mother has to run the family. We'll have to survive. We'll have to live, but there is no money. In my bank account, only 25 lakhs was there. So this 25 lakhs, in a year, I spend around 10 lakhs as my expenses. This 25 lakhs would be enough to run the family for, say, 3 years. After that, what will happen to me? Had I invested 2 lakhs in life insurance, and let's say for a 2 lakh amount, I'll get a cover of at least 5 CR. If I'm investing 2 lakhs in a year on insurance, I would get 5 CR of cover. Yeah, had there been a demise, this amount is almost 20 times of the fixed deposit that I have. Even if I say deposit this in a bank and at a rate of 5.5, 6%, at the time I withdraw this amount will be 30 lakhs. My father would have taken insurance for 5 crore cover, paying the same amount or even lesser to the insurance company. I get 5 crore, which is almost 20 times. So the family can run at least 3 years into 20 times. 60 years the family can run. Considering the inflation, considering this child today will grow up, he will start earning, this amount would definitely safeguard. This amount will definitely help the family to run for the time being. Of course, there would be a bereavement on the loss of a closed one, but at least the family will not fall in front or has to beg in front of anyone. The amount will be there, which you can have in your bank and at least sustain your life, run the household. Similarly, I would come to health insurance now. Why a health insurance? I believe I was able to answer Mr. Om Alok Kain. If you have other query, you can please post it. I'll definitely answer it. Now, this is the importance of life insurance policy. So, insurance is basically to protect you from any financial loss. Previously, when LIC was formed, it was formed mainly because the father was the almost in every case, father was the only bread earner. He was earning money, he was getting some income for the family. In case of a natural calamity or death, then that income stops for the household. So that's how life insurance helps people to sustain their life or living being. Now, when we come to health plan, so why should one buy a health plan? I'll tell you a very simple reason. Today, the cost of medicines, hospitals, hospitalization, healthcare has increased. Previously, even if you see, previously a bandit would come at 1 rupees. Now a bandit costs around 3 to 4 rupees or 5 rupees. So almost the price has doubled, tripled, or the inflation has been much higher. So in order to safeguard yourself from the financial loss, to take a medical insurance or a health insurance. Let's say today I am doing good, I am physically fit, touch wood. But tomorrow, if there is a health problem, I have to get admitted in the hospital, and there is an expense of 25 lakh, 30 lakhs. I would not have that much cash available with me or even in the bank. But if I only pay 20,000 rupees annually to an insurance company, I can get a cover of at least 35 lakhs from the insurance. So this is a very small amount that you have paid against which you are getting coverage for a very large amount. So insurance is a very small proportionate premium amount that you have paid, but the coverage is tremendously high. This gives you cover from the financial losses, and there will not be a situation wherein you are unable to take that healthcare facility from the hospital just because you don't have the funds, you don't have the money. With insurance, you can take the healthcare that is required to get yourself treated. So this is all from me on insurance. Now I'll take questions. So Nina, if you can help me take the questions now. Hello.
Yes, just 1 minute, Shantanu.
Yes.
Yeah. Now, so we have a lot of questions. I'm going to read you one that is recurring. I think Mohana has asked this a few times. How will the insurance company get profit?
Well, so I'll explain it. Thank you, Mona, for your question. I'll explain it. So what happens is insurance companies, they source this insurance premium, which is a very proportionate amount, say 10,000 rupees. So what the concept of insurance is, it is mainly pooling of funds. So 10,000 rupees to take from 10 people. You have a fund of 1 lakh rupees. Now, there can be a disaster at one person's end or two persons' end. At a single point, not all the 10 people will have the calamity or the loss. So that's how insurance takes out a proportionate amount. So let's say there are 10 people who have paid 10,000 each, 1 lakh, and two-person out of them face a financial loss of say 50,000 or say 20,000 each. Then 40,000 is the amount the insurance company would pay to the nominees or the insured, and remaining is something which they keep with themselves. So it is very tricky to understand the way insurance companies make profit. But yes, there are profits which the insurance companies make, but it is not up to a very high or large extent. So at a time when COVID came in, when almost everyone was getting hospitalized, lots of claims were coming into the insurance companies. Companies have had to undertake a loss of around 200, 300 crores each. So insurance companies are designed in a way that they insure themselves with another partner, which is known as the reinsurer. So today, if I take 100 rupees from you and I give you a assurance of amount, say 1,000 rupees, then I again reinsure myself. The insurance company will again buy a insurance at the back from a foreign company for that 1,000 rupees that they have undertaken the risk for. So the for the way normal people, retailers, we take an insurance. Similarly, the insurance companies also take a insurance at the back end from the reinsurers. That's how they safeguard their calamities or their unforeseen losses. Hope I was able to answer your query.
We have another question also asked a couple of times by Hari Keshavan. He's asking the meaning of overage.
Overage. So this is pertaining to. So can I have this? Can I have the like? Is this asked in the link on YouTube?
Yes, he says overage meaning sir, and I think it has something to do with one of the presentations. I don't know if it was supposed to be coverage and the C was.
See, overage. See, I'll tell you overage in insurance. How we call it that there are two ways. It can be an underinsurance. Overage is something which is over and above the estimate. Say I have taken a estimate that my expenses would be 1,000 rupees. Overage is the surplus on that expense or the estimate that I have taken. So it has no direct link with insurance as such, but it can be used in a general term, overage. So I
Yeah,
wanted to
thank you, Shantanu.
understand on the
Yeah.
context where they have got it, because it doesn't have a direct link with insurance as such.
I think in one of the slides of your presentation, the last slide that you showed, I think it may have been from there, but we'll wait for Hari to perhaps give us another list of that. We'll take another question meanwhile. Bros Plays, it's a YouTube name, is asking, are there any insurances which are compulsory?
Well, unfortunately, no. In India, we don't have any insurance that is compulsory, though the government is trying to come up with various different schemes wherein they would insure the person. But no, as such in India, there are no insurance which is compulsory to a person. Yes, there are certain categories wherein insurance is compulsory. Let's say if you take a vehicle, you want to run it on the road. So motor insurance is compulsory if you want to possess a vehicle and run it on the public roads. So motor insurance is something that is compulsory for people who possess a vehicle, be it a two-wheeler or a four-wheeler or any registrable asset. But otherwise, no, there is no such insurance which is compulsory, at least in India. So if we talk about abroad in America, people, all the resident gets insurance from the government itself. And in there, the take-in ratio of insurance is couple of million times higher than what we have. Hope I was able to answer it.
So the next question that we have is from Pradeep A. Can the insurance company update insurance policies?
Can the insurance companies update insurance policies in terms of? I would like this question to be completed because this is not a complete question. Insurance policy is valid. Say if you take a healthcare insurance, a Mediclaim, it is valid for a year. Life insurance, it is valid for the tenure that you have selected. Say for example, you take a life insurance for 20 years. It will be valid for 20 years. If you take a motor insurance, you can take it for a year, and the third party liability insurance is at least for 3 years in case you are buying a new motor vehicle. Updating the policy, I didn't get you.
Okay, we'll move to the next question. Sohani is asking, is it possible to get the full payment on cancelling the new policy in free lock period? I'm assuming, not look period. Yeah,
it's free look period. She is right. So
free look period. Okay, that's my
yes.
mistake.
So every insurance company gives you a free look period, which is probably around 15 days from the date of your inception of the policy. So during that period, if you officially complain to them or write back to them stating that you want to cancel the policy, then of course, yes, you get the amount back, the full premium back. In case of a vehicle, if the vehicle has been used in case the vehicle has been used or has been put on road, then they would deduct a pro rata amount. Apart from that, for any other investment plans, life insurance, health insurance, you can have a 15 days free look period wherein you will get the entire premium back.
There was another question somebody had asked on endowment, and Om has also asked a question. In which condition one will take a term life insurance instead of endowment plan?
Okay, so a term life insurance is something wherein you don't get a lump sum back. So I'll tell you the difference between a term life and an endowment. Term life plan is a plan wherein you have secured yourself. You see that, okay, till the age of 60, I'll work. So today I am 30. I know that till the age of 60, I'll be working. I'll be earning bread for the household. Now, during this period, if there is a death, or if the person dies, then there can be issues with the family because the income stops. In that case, if you wish to take a term life, you can take it for a period of 25 years, 30 years. Endowment is something wherein you get a lump sum back. So let's say if I take a 30-year plan, at the end of the 30th year, say I am 64 or 65, and I have survived the maturity. I am still alive when the maturity has come. Then I'll get a lump sum back in case of an endowment. In term life, I don't get anything back. I was only covered for the term period. Had there been a death, my nominee would have got the sum assured. There is no death. I have survived the term life period. There is no payout. Endowment, I get a payout from the insurance company at the end of the insurance policy period or at the maturity.
There's also a question someone's asking, what is a lump sum?
Lump sum is a one-time amount. So lump sum, it's a basic English word. So it is payment or any amount at one go. Say there is 1 lakh rupees, it's a lump sum. I distribute it in parts or installments. In a year, it would become 8333.33. So lump sum is a one-shot amount. But the previous
Biz is
questions,
asking.
I would
Yes.
like to tell something to all the students and the teachers. I was not expecting such mature answers from the school students, but definitely I like the way people are participating and throwing the questions. Yes, please.
Yes, they're a very well-informed group,
Because
and
I
I'm
was
sure
not
they've gone through the content.
right, because I was not that much informed when I was a student. Yeah.
Um, so there is Abir from Free Fire. I think that's his YouTube name. If I've gone through an accident and I'm not having any insurance, so can I buy insurance at the end time?
No, you cannot do that. What the advertisement shows nowadays is that you're just able to buy the insurance right before the moment the accident has happened. So few of the insurance companies show such kind of advertisement. But no, at the time of the incident, if you don't have a insurance, you are not insured. So the insurance has to be there before the accident.
Lipika is
After
asking, what do you mean by the term insurer and insured?
So insurer is the company who is insuring the person, and insured is the person who is insured. Let's say Tata AIG is a company, insurance company. They are the insurers. Let's say Shantanu Ghosh is the customer who has purchased a mediclaim policy from Tata AIG. So Shantanu Ghosh becomes the insured.
Ruparaj is asking, what happens if I get in a car accident?
Hmm. I didn't get the question.
Yeah, I think well, first of all, I hope that never happens, but maybe you want to elaborate a bit, Ruparaj, and then ask it.
So I would like to
Christian,
take a question here, Nina. Yeah, Krishan Kalia's
yeah,
question, what is bottom read?
yes,
It's a very
yes.
important question. So if you recollect the presentation where I have shown you the history of world insurance, I have shown you the ships which were going out for some sail or voyage. So previously there were bottom read contracts, which were basically loans. The person would take a loan against those bottom reads, or the bottom read is basically the vessel. The ship here is termed as the bottom lease. Bottom lease contract is nothing but the loans that a person would take against the ship. In case there is a damage, the ship needs to be repaired. Then against the ship as a collateral, the person would take a loan, would get the ship repaired, and slowly and steadily he'll pay back the money. So that's a bottom league contract which was previously used. So I gave you the example of the pirates when they would attack a ship, how the merchants would gather at one place, they would pool in certain money. In case there is a loss to one, the money would be paid from the pool. So bottom league contract is related to that. It's basically a loan against the vessel. There is one question from BL Story. Can we cancel an insurance? Yes, of course we can cancel an insurance, but if it is beyond the free look period that the insurance companies provide, then there would be certain charges paid by certain charges which would be deducted from the premium by the insurance company, and the rest would be refunded to you. Yes, Nina.
There are several questions. I'm just trying to weed out the repeats. Um, I think there are a few questions situational. When something happens to us and we lose our life before the term insurance is completed, then will the remaining be given to our family? This is from Gaurang Maharwal.
Okay, so if the term insurance is completed, okay, sir, when something happens to us and we lose our life before the term insurance is completed, then we'll be remaining. So the remaining will not be given to your family. Instead, what happens is, let's say you have taken a 20-year term insurance. You would have, and you have selected a premium payment of also 20 years. Like every year, you will be paying a money to the insurance company, and for a period of 20 years, the insurance company is securing you. Say at the end of second year or third year or fourth year or any year between first till 20th, there is a debt to the insured person. Then at that point, the payment of premiums stop, and the sum assured which you are covered up to would be paid to the nominee. In case you have kept your family member as a nominee, then your parents or your family members, your let's say kids would get that money, or your spouse would get that money. That is the sum assured, and the payment of premium stops exactly right there. They don't have to pay any further premium.
Lipika is asking, what is declaration page in insurance policy?
Yes. So declaration page is let's say a commitment or a sign off taken from the insured person that all the details has which has been submitted to the insurer, the insurance company, by the insured, the person who is taking the insurance, are true. So insurance works in a principle of truth. So what insurance companies consider is that the whatever you are telling me at the inception of a policy or right before taking a policy is to the best of your knowledge and true to your knowledge. You cannot do any false, you cannot give any false information. So a declaration is taken. Now for let's say a health insurance policy, a declaration of your good health, we call it as DOGH, is taken, declaration of good health. When you are taking a policy, you are confirming to the insurance company that yes, you are not having any previous injuries or previous illnesses. So that's what a declaration page is all about. Nina, I'll take this question from Lipika itself, which is co-insurance.
Yes, co-insurance. Yeah.
Yes, it's a very important topic. So, co-insurance, say for example, insurance companies also have a risk appetite, a limit up to which they can take a risk. Okay. So, in case there is a huge risk, let's say a oil tanker company, oil depository, wherein the amount of the risk would be, say, couple of $100 million or even more than that. So in that case, insurance company might not be able to do the insurance single-handedly. So what they look at is co-insurance. So two, three, four, five, 10 different insurance companies will form a consortium and they would take a percentage of the risk. Let's say if the total risk value is 100 and there are five insurance companies, they would distribute the risk to among themselves. So they can take 21% and remaining 18, 19, 20%. So one company has to be a leader in terms of taking the risk, and all the others would be followers. So one company, insurance company's share has to be higher than that of the others. So that is what co-insurance is. When couple of companies, it can be two or more, who club together, form a consortium and take an insurance or insure a person or a company. That's where co-insurance comes into existence.
Another question from Lipika is, what is a deductible?
Yeah, deductible, it is a minimum amount that the insurance companies would deduct from the total payment. Say I have a medical policy wherein there would be a medical minimum deductible of say 10,000 rupees or 1%. So in case there is a 100 rupees claim that you have raised with the insurance companies, the insurance company would deduct the percentage or the fixed amount and they would pay you the balance amount. Understand why deductibles are used is that there have lots of frauds in terms of insurance as well. People would intentionally do a accident or something and try to get the insurance money. In order to stop it and have a control on it, insurance companies have had the concept of getting the game in this getting the skin on the game. So what happens is that if 100 rupees is given to you for free, you will not be taking care of the asset. You would be using that as asset as if it is doesn't belong to you and anything can happen to it. You don't have any ownership about that asset. But if insurance company pays you 90 and risk or the remaining 10 or a certain percentage has to be paid from your pocket, then in order to mitigate your financial risk, you would start taking care of that particular asset or your even for that matter for your health also. Had insurance company been giving you 100 rupees or 100% of your claim, every day you would be going to an hospital, sitting there, getting admitted and taking the claims from them. Since there is some deductible, which company to company it depends, it starts from 5% to 10-15%. Then since your skin is there on the game, since there is a financial obligation on you as well, you will start taking care of your health. You will not get admitted to a hospital without any reason. So that's what deductible is introduced in insurance policies.
From Abhishek Prabhakar, are there any taxes on buying an insurance or getting the money from insurance?
Yes. So I'll break the question into three parts. Are there any taxes? Yes, the insurance company has to build in the GST, goods and services tax, in the premium. So yes, there is a tax when there is a purchase of insurance. Second, tax. If you purchase a medical insurance or a life insurance, depending on the tax slab the person is at, and as per the income tax slabs that the government has bought into, the person would also be saving certain amount. So if I am in a 30% category, whatever premium I pay, I save 30% of tax on that. The third aspect of tax on the amount. So no, there is no taxes in the amount that you get as claims. So let's say if you have taken a term life plan and there is a demise, then your family would get the entire sum assured. If it's a 1 crore sum assured, your family will get the entire 1 crore sum assured. No taxes would be deducted from that. Hope I was able to clarify this question because this is a very important question. Lots of different taxes are involved.
Chavindra Meena asks, can a person limit the premium payments for a smaller amount of years than the policy's duration?
Yes, they can do it. So in term life insurance, there is a payment term which you can define. So if you want to take a 20-year term life plan, but you want to make the payments in 5 years only or 10 years only, not up to the entire insurance premium period, then you have the option to pay for a limited period. But the lower is the payment period, the higher is the amount. Basically, if you have to pay me 100 rupees in 10 days, you have the option to pay me 10 days each, 10 rupees each for 10 days. But that 100 rupees, if you have to pay me in 4 days, you have to pay me 25 rupees for each day. So the lesser is the premium payment period, the higher would be the premium amount. If you want to keep your premiums at a lower side, the period has to be on the higher side.
Mohana asks, what are the terms and conditions to apply insurance?
So first you will have to be above 18 years, then you will be able to apply for insurance. You need to see what kind of insurance is required. Let's say if you are after your 12th, you want to go abroad for studies, you can take a travel insurance, but it has to be taken by your parents. You can take your health insurance. If you go abroad, the expenses are too high. In America, the average cost of medication or healthcare would at least nothing be less than say 50 lakh rupees. So you can take a health insurance. The first condition is you have to be above 18 years to take an insurance on your own. Otherwise, your parents who are earning members can take an insurance. And there are multiple insurance products and they have lots of terms and conditions. So I see the question coming in couple of times. The terms and conditions page itself would be around 40 to 50 for every insurance policy.
This question is also popping up a lot. It's from Manveer Plaha Gaming. Suppose if a person dies when his insurance is not active, but he paid the money, then will his nominee get the insurance amount?
Well, no, the nominee will not get the insurance amount because the insurance is not active. And by not active, I mean either the policy period has ended, matured, or the person has not renewed the policy. So in either of the cases, if the insurance policy is not active, the nominee would not get any money. If this is an endowment plan, then at the end of the policy period, or at maturity, the insured and the family would have already received some money. So every insurance has a different process, different type of payouts and settlements.
Okay, I think we can take this question too. What happens if a person doesn't pay premium payments?
Okay, so if you don't pay a premium payment, then as per the regulations of IRDI, you have up to 30 days time to make the payment. So if today my policy is expiring, I will get a grace period of another 30 days to clear the payment in case I am not making the payment. So that is only in case of a LIC policy, a life insurance policy. Within these 30 days, if I don't make a payment, then after the 30th day, the policy would lapse. In case of a fire insurance, a home insurance, your vehicle insurances, motor insurances, the moment the policy expires and you have not renewed it, you will not get any grace period. You will not be able to claim anything.
I think apart from that, all the questions have been answered. The students have been typing
in their questions again and again. There is one last question, perhaps if we can take that. How to apply insurance? Hari Keshavan is asking.
Yeah, he has been asking this question for quite a long time, and even Krishan Kalia is also asking this question.
How do we buy insurance? So
right. So for to buy an insurance, see, of course, I am from the insurance background, but I'll not tell you directly. Yes, this is the link, and you go buy an insurance. First, you need to understand as a person what are all the challenges or what are all the losses that you foresee. So as a student, I don't see a loss that you foresee, but definitely you should tell your parents to have a term life insurance and then healthcare insurance for your family. The entire family should have a medical policy and a health life insurance policy. Apart from that, if you have identified certain uh, unforeseen events, like if you have a big house which can be attacked by, let's say, fire, storm, or anything, you can go for a property insurance. Let's say you have a motor vehicle, you have a two-wheeler, you want to have it insured because without insurance you cannot run these vehicles on the road. Then these are the two things which we said: the importance of buying a life insurance and a health plan. These two are mandatory. Now, how do you apply for an insurance? You would find brokers who are there. You would find insurance companies. There are 28 plus different insurance companies in India. If you type insurance, purchase insurance plan in Google, you will find lots of aggregators like Policy Bazaar. From there also, you can take insurance. And of course, from us. Nina, hope I was able to answer it correctly.
Yes, indeed. I'm just trying to see if we have missed any question. I think Aryan has asked, what if the nominee also dies in the accident? But I think that refers to your previous answer. So, which is if a person dies when his insurance is not active, but he paid the money, then will his nominee get the insurance amount? And I think it's a subset to that question. But apart from that, yeah.
So in case there is no nominee, then no amount will be paid. Because I assign someone to be my successor, to be my hire. and insurance is paid to cover the financial loss. Let's say I have kept my spouse as the heir or the nominee, then why would I do that? Because in case of a calamity, in case of my death, I would still want my wife to lead her life and to run the household. So for that, the insurance amount or the sum assured amount would be required to be paid as claim. Now, in case both the nominee and the insured both have died, then no amount is being paid. Of course, the insurance companies then definitely check for other people who are associated with the family, the next person who is there close to the family. These are all checked, but in certain general cases, the amount is paid to the nominee itself. If there is no nominee, it will not get paid.
Okay, there's a question from Tanishka's lifestyle, how we buy insurance. I think that's already been answered.
Yes, we have answered.
So yeah, so we'll share the link of the webinar, and you can view the recording once again, and then all the answers you will receive.
So I would like to share thanks everyone. Thank you all the students and the respected teachers here. Thanks Nina for inviting me, and thanks to all of you for sitting here patiently listening to all the aspects of insurance and understanding the concept of insurance, which is very matured, and then throwing such wonderful questions at me, because I didn't expected such kind of mature questions from the students. But indeed, I love this session, and I would also like to be back among the students again, be given a chance. Thank you, Nina. Thank you, everyone.
Oh, that's very lovely. Thank you, Shantanu. If you all have any other question which perhaps wasn't answered, please email it through your teacher, or if you can send us a WhatsApp message as well through your teacher, that would be great. So all the students and the teachers who are online now, in terms of the next steps, tomorrow is our third webinar. Link will be shared with all of your teachers. That will be on, I think, investments, if I'm not mistaken, the third webinar. Same time, all of you, if you all can join, that would be wonderful. And I'd like to take a moment just to thank everyone, and especially a huge thank you to Shantanu for taking the time preparing a presentation which is easy to understand for everyone. You really made it, you simplified it. In the world of insurance, I think it's a very difficult area for most of us to understand in terms of the various types of insurance and everything else. So you really made it very, very simple. So thank you so much for taking the time to put together this presentation in a very simple manner, and for going through the questions so patiently. Explaining it to them. We really appreciate it. So on behalf of USO and the other partners, thank you very much, Shantanu.
Thank you, Nina. Thank you, everyone.
And to all the students and teachers, thank you so much for joining us. For those of you who are signed in, please do follow us on our YouTube channel. That way you get the updates on every new video that is posted. And any other question that you have, please share that with us through your teacher. All right, thank you, and have a very, very good evening.